Well, if you see the numbers that in most European countries nowadays we have an increase of GDP, this is a situation that wasn't like that for the last 5 years. So Germany was one of the countries that had a stable economy and that was growing in small numbers over the last 5 or 10 years. So the situation nowadays that other countries are catching up are also recovering. That's a good development. But for Germany, it indicates that the stability, if you look for core and for solid investments, you should look on not on a short-term basis, but on a mid to long-term basis. And from that perspective, the German situation and the past and the future shows the stability that you need as a core and an investor who wants stability. So this is something, Germany is kind of boring but stable. So if you go for opportunistic investments, there are some opportunities, but it's not the right country really for opportunistic ideas in general. So, and perhaps one thing that I would add to it, if you look at different countries to invest in, you always have to take into account the situation, the structure, and the history as well. Germany, as a federal state, as a federal country, does not only have 1, 2, or 5 investment places to invest in. So, but I think we come to that situation later in the discussion.
Well, you know, as far as the office segment is concerned, we are strongly correlated to the GDP and employment rate. And unfortunately for France, as we have seen on the slides, the forecasts are not dramatically positive, closer to 0 than to 3%. You could see in other developed countries, like in the US, like in the UK, like from all these countries, you usually bring the money in our markets. So in terms of money allocation, there's not so much pressure today to invest in France, not from a real estate side, but from I would say, the economy side. So we don't have a lot of discussions, I would say as many discussions we could have with big corporates trying to put their headquarters in Paris rather than in Frankfurt or in Paris. So yes, today the market, the office market is not excellent from this point of view.
I would say that, you know, in Europe in general, we are quite stable on the long term. What is different today is that we have different cycles in the different countries, as we saw in the presentation, which means that, for example, when we look at Spain or Ireland, where we know that we are probably not yet at the bottom, we have opportunistic investors, we have non-performing loan portfolios, we have another kind of investment than what we have in the mature markets and in the stable, long-term stable, even if we have low growth right now, but we have cities like Frankfurt, Munich, or let's say Munich, Hamburg, Paris, we have London, we have Stockholm, where we have prime locations where capital values are stable, where we have either rental growth or rental decrease, but that usually is taken away by yields. On the other hand, so I think the cycles are different, and this unexpected growth in the stable markets, such as Germany, such as France, is just different. You have a lot of core activity, and I think it's just the differences in the cycles that we see, and where, of course, investment volumes differ. But it's more a question of the kind of activity we see, I think.